Hello everyone. So this is Amit Harnia and we were discussing about the relevance of IFRS and IndAS and how IAS is also relevant in today's scenario. So if I continue with it, IAS and IFRS is the IFRS of today. So there is no difference. The only difference is that the international accounting standards which were issued from year 1973 till year 2000 were known as IAS. So if I talk about who brought this change, it was a group of 10 countries who started International Accounting Standards Committee. They decided to develop international accounting standards in the name of IAS. They started issuing standards in the name of IAS 1, IAS 2, IAS 3, IAS 4. And this journey continued till IAS 41, till year 2000. And during this journey, there were also some standards which were replaced or which were either merged with other accounting standards. So if I look at the list, so IAS 1 is now going to be replaced with IFRS 18. So I'll share the difference between IAS and IFRS. So for the first time, this big change is coming. Otherwise, IAS 1, IAS 2 was relevant since 1973. The next standard, IAS 3, IAS 4, IAS 5, IAS 6, they were replaced and they were merged with other accounting standards. So we had IAS 1 revised as well because some of the content of these standards was merged with IAS 1. We still have IAS 7, IAS 8, IAS 10, IAS 11. IAS 11 is replaced with IFRS 15, Revenue from Contracts with Customers. So the standard which has been replaced or merged with other accounting standards is not given a new name. The list goes blank, like if someone is trying to look at the list, they'll feel that something is missing. It's not something which is missing, it's simply that it has either been replaced or it has either been merged with other accounting standard. So if you look at the list will go like IAS 1, IAS 2, the next standard is IAS 7, Statement of Cash Flows, IAS 8, Accounting Policies, Change in Accounting Estimates and Errors, and it will be IAS 10, Events after the reporting period. So if you look at the list, there are standards which are still relevant and applicable. Among them it is IAS 16, Property, Plant and Equipment, IAS 19, Employee Benefits, IAS 20, Government Grants, IAS 21, the effects of change in foreign exchange rates, IAS 23, Borrowing Cost, IAS 24 for related parties, IAS 26 for the retirement obligations, IAS 27 is for separate financial statements, IAS 28 is a standard which is now dealing with investment in associates and joint ventures, because there used to be a standard known as IAS 31 which has been merged with IAS 28, investment in associates and joint ventures, because IAS 31 had equity accounting as well as proportionate consolidation. So proportionate consolidation is prohibited, so there was no option other than merging it with IAS 28, investment in associates and joint ventures. So you'll not find IAS 31 in the list as well. IAS 29 is for hyperinflationary economies, so we do not study it as part of any curriculum because there are some particular standards which are not being tested generally, like IAS 4, IFRS 4 insurance contracts, or IAS 29, the standard for hyperinflationary economies, or IAS 26 for retirement obligations. So these were the standards which are not tested generally by any of the accounting body. Since these are used by some specific industries and only very few people will be using these accounting standards, so not generally applicable, so we do not study them as part of the curriculum of Diploma in IFRS or the syllabus of ACCA, FR, Financial Reporting, or SBR, Strategic Business Reporting. So these are studied by someone like who specializes in these areas or works in that industry. So that's why these standards are relevant and applicable as part of IFRS, but they are not being tested at the global level for any accounting course. In the list of IAS, after IAS 29 it is IAS 30 which was replaced, IAS 31 was merged with IAS 28, IAS 32, IAS 39 was replaced with IFRS 9, IAS 33 earnings per share is still relevant and applicable, IAS 34 is for interim reporting, still relevant and applicable. IAS 35 is replaced. IAS 36 is for impairment of assets. So if there is any asset which may have suffered impairment, we check for its indicators. If there is an indication, we'll test for impairment. If it is impaired, we'll impair it, else we'll do nothing. IAS 37 is the standard for dealing with provisions, contingent liabilities and contingent assets. It was to combat creative accounting. IAS 38 is dealing with intangible assets. Now this was a standard very similar to IAS 16 PP. So till the time there was no standard for intangible assets, I think the reference was taken from IAS 16 property, plant and equipment. IAS 39 is replaced. IAS 40 is a special standard for investment properties, that if an entity is willing to invest in land and buildings, how they should account for it if they do not intend to use it as part of the business. So if we classify any land and building as part of IAS 40, it's a declaration that we are not using this land and building as part of the business. We are investing in land and building. Until the time this land and building will be vacant, we may give it on rent, we may earn some rental income, and our idea is to earn appreciation. So we have a choice of models, fair value model or cost model for IAS 40 investment properties. IAS 41 was the last standard, which was based on agriculture. We were dealing with biological assets, living animals and plants. Earlier, all the plants were covered under IAS 41, but then there was an amendment that bearer plants like fruit-bearing plants or trees should be covered under IAS 16 property, plant and equipment, because these fruit-bearing plants and trees give the user benefit for more than 1 year, for a longer period. There is a care which needs to be taken for maintaining them. There is a cost of growing them, then waiting for the period to bear some fruits out of them, so they give them benefit for a longer period. So there was no point including them as part of IAS 41, because IAS 41 was mainly dealing with measurement as fair value less cost to sell. There was no concept of depreciation on these fruit bearing plants and trees. So this area was shifted to IAS 16 property, plant and equipment. Now this was the year when a lot of shift happened for International Accounting Standards Committee. None of the countries, none of the accounting bodies agreed to it. None of them agreed to implement international accounting standards. Now, what could be the reason why they did not implement international accounting standards when they were developing it from 27 years? Why no one agreed? The reason was IAS 8, accounting policies, changes in accounting estimates and errors. IAS 8 said that if you move to international accounting standards, accounting policy said that whenever there is a change in accounting policy, you need to apply that change retrospectively. What does retrospective means? That you need to apply the change as if we have always been using international accounting standards since beginning. Now, who do you think will agree to it? Who will agree to something like which is not practically possible or practically feasible? None of the accountancy bodies agreed to it, none of the countries agreed to it, because it will require a lot of time to get them implemented. Even the companies were not willing to do so. So they thought that there is something else which needs to be done. So they came up with an idea that they'll come up with a new unique accounting standard which will help in implementation of these international accounting standards. So they decided to form a foundation. So International Accounting Standards Committee became International Accounting Standards Committee Foundation. It was known as IASC Foundation. IASC Foundation. Now this foundation decided to set up a new board, and they set up IASB, International Accounting Standards Board. Now, what is the role of IASB? To bring harmony in global accounting standards, to develop high quality accounting standards, and they were monitored by IASC Foundation. And they coined a new term, IFRS. They said that if any new accounting standard we will develop or will issue, we'll be terming it as IFRS, International Financial reporting standards. And the first job at hand was to come up with a standard which will help in implementation of these international accounting standards. So someone asked, what about the standards they've been issued, which have been issued till date, which they have been issuing since 1973 till 2000. So it was decided that the standards which have already been issued and which are still relevant and applicable will continue to exist as part of IFRS. They'll be under the umbrella of IFRS. We cannot delete, or we cannot simply destroy what have been created or developed till now. So we decided to continue with IAS as part of IFRS. So as far as IAS and IFRS is concerned, there is no difference. The only difference is that the standards which were issued before year 2000, they are known as IAS. The accounting standards which were issued after year 2000, they are known as IFRS. And the first standard issued by International Accounting Standards Board was IFRS 1, first time adoption of IFRS. Then they issued IFRS 2, share-based payments. Then they worked on IFRS 3, business combinations. They worked on IFRS 4, insurance contracts. Insurance contracts was a standard which is not fully developed. Now this has recently been replaced by IFRS 17 insurance contracts. Now for the first time in the list of IFRS, you'll see one standard which is going to be missing now. You'll not see this standard as part of the IFRS series in future, because IFRS 17 has taken over insurance contracts. Earlier till IFRS 16, all the standards were intact, were relevant, applicable, there was no change. IFRS 5 is a special standard for dealing with non-current assets held for sale. Non-current assets held for sale. What if we intend to sell any asset and we do not intend to use it anymore? It has not completed its useful life, but we intend to sell it before the end of its useful life. What shall we do? One of the investors looked at our balance sheet and they were very happy looking at a promising set of machinery on my books. But the next year when they look at it, I have sold some of them. Now they were feeling helpless in this case because they were not aware that the company is going to sell these assets immediately within 1 year. They invested in this company in the hope that they are having good amount of machinery, have invested a lot of money, and these machines will help in generating future economic benefits since this entity is going to use these machines for generating revenue. But by the time they reach the next year, they get to see that some of the assets are missing onto the balance sheet, and they have not even replaced those property, plant and equipment items with new PPE items. They have good cash flow because of sale of these assets, but they have not reinvested this money, now, which is not a good sign for someone who is looking at the long-term prospects of a company. So what to do in these cases? So there is a special standard known as IFRS 5 non-current assets held for sale, which said that if you intend to sell any asset within 1 year from the date of classification, you need to reclassify it as IFRS 5, you need to take it out from PP, you cannot show it as part of your PP item, and it will be shown as a current asset because you intend to sell within 1 year from the date of classification. So special standard for dealing with such situations. Then there is a standard